Hello there everybody, a very good morning to you all and welcome back to howtotrade.com and welcome back to another one of our live streams here in our trading room and of course on our YouTube, Facebook, LinkedIn and X channels. I hope everyone has had a good week of trading so far. I believe that things are about to kick off just a little bit with obviously NFP coming up on Friday and the really just rubbish news around the escalation of the war in the Middle East, which we'll talk about as well. I don't really want to talk about it, but we have to. It's going to be a huge thing for the markets, and we'll talk about that as well. I know Shane's all over this story as well. If you are around, pop up and say hello. If you were on yesterday's stream, I have no idea what happened. My whole system crashed on me for the first time. That's never happened to me before, so I do apologise. I was near the end of the stream. I was answering a few questions, and I will go through I will answer the question I was answering when it crashed on me, which I think was on you, Dillaby, right? I think it was about my risk management plan. So I do apologise about that. Hopefully, fingers crossed, it doesn't happen today. If anyone has any questions they want to talk about on the stream, and feel free to drop it in the chat room, on any of the chat rooms that you have access to, or you can direct message me in the trading room as well. Hello to you, Curtin. Good to see you. I'm also aware that I am on. I'm on an hour later than I normally am. I was recording a new video for our YouTube channel about trading journals, so I do apologise about that. I had to move that stream back just an hour or so. Okay, good stuff. Right, let's just deal with the elephant in the room, really, which is obviously the really distressing news out of the Middle East, where Iran have launched an attack on Israel in a new escalation of the current war that's going on there, the current conflict. This will be a talking point now for the foreseeable future. As I said before, I wish I wasn't talking about it. Because we're looking at it from a market's point of view when we're talking about innocent people's lives being lost on both sides, which is not, it's just war's never, there's never a winner really in war, in my opinion anyway. I certainly won't be taking any political sides, so don't try and ask me any questions on that. I won't be taking any political sides. I'll just be trying to look at it from a market's point of view. Okay, so hopefully, we can get a gauge for how this is going to affect the market. So Iran basically last night, if you're not aware of this, they launched hundreds of missiles towards Israel, with at least some striking Israeli territory. It's the second attack by Iran this year after it fired hundreds of missiles and drones at Israel in April. So it's a new escalation, and we were talking about peace talks or ceasefires. We're now talking about another escalation. What was the scale of the attack? Iran launched around 180 missiles, 110 ballistic, 30 cruise missiles. Most of them were intercepted by Israel's drone defense system. I don't know if you've seen that. It's scarily impressive. Israel has not reported any serious injuries. You can get into the why that they've done it. It's all to do with the killing of the Hezbollah chief Hassan Nasrallah, and it's a bit of a retaliation on that. Iran does not recognise Israel's right to exist and seeks its eradication. It has been years back in parliamentary organisations opposed to Israel, which is what the Hezbollah chief or the Hezbollah group were. I suppose that was what's been called as Iran's safety blanket almost, and that's sort of been attacked. So they're retaliating, should we say? Iran have made a big mistake apparently, and they will pay for it. That tells us that there's going to be, or potentially, some retaliation from Israel, which is again, not ideal for anyone. But that's the situation that we're in at the moment. When we look at it from a market's point of view, what do we think? Well, we know that that's not really that positive for risk assets, because now Iran getting involved, that sort of ties in more the US, the UK, the West really. It brings them in a little bit more when Iran are involved, because obviously the conflict between Iran and the US. So that's probably why the markets reacted as they did yesterday. You might have noticed a bit of a sell-off in the stock market, and this is the reason why. You'll also probably notice that if you look at the volatility index, this is called the VIX. It's called the volatility index. When that news, I think when the White House reported that they were going to be doing that, look what happened to the VIX. Ouch. Not great, is it? So yeah, that's what happened there. And yes, that's what unknown user. Hello to you. We are going to be talking. This is leading into the trading opportunities that you get from this, because Israel may now target Iranian oil refineries in revenge strikes. What does that mean? That means oil prices are likely, if this continues, you can see a really nice bounce in oil prices at the moment. So if you look at oil on a daily time frame, you can currently see that we do sit. There you go. We do sit within this bearish structure still. Looks like we're going to come up and test the 61.8. I'll be interested to see if we can get that. There's also an order block sitting here. So I do think there's a couple of areas of resistance coming in for oil. And I think one of them could be at this 61.8 at 72. And the next one could be up at 75. However, I'm a little bit concerned about trying to sell oil in this environment, especially now we've created a new higher low, which is sitting within, and as I mentioned to people, higher time frame support between that 64 and 68 area had been support all year, or over the last couple of years. Now we're getting the bounce higher in oil. I actually think that oil could, if this is kinetic FX, if it lasts forever, which it does feel like it's going to do at some point, then we could see oil break out above 78. And I've always said, should we get oil prices trading above 78, a close above 78, that will then, for me, turn me bullish towards oil, rather than what was happening is I was bearish on oil because of the lower lows and lower highs. Okay, good stuff. Right, Dillaby, good morning to you. I hope you're great and getting ready for your vacation. Yeah, if those of you are not aware, without boasting or anything, I am away from the... Okay, has my camera just crashed? Man, what is going on today? What is going on this week, guys? Can you guys see my camera? Give me 2 seconds, guys. Not really sure why that's happened, but that's really, really annoying. Look at the... Okay, it is what it is. We'll have to do it without the camera today. You can still hear me though, guys, right? Please let me know if you can hear me. I do apologise. My camera looks like it's decided to stop working today. Everything's going wrong this week, isn't it? Yeah, sorry about that. I do apologise. Anyway, you can still hear me. That's the main thing. And let's just have a look at some trading opportunities now. Let me just see if I've got any other questions in the room as well. You can still hear me. Yeah, I don't know why I froze there. Don't know if I can try and fix it, but it is what it is. We'll have to continue without the camera, unfortunately. Okay, right then. So let's now look at what that impact could be on the likes of the gold market. So as you saw, what happened when that news was announced, as you saw, gold picked up a little bit of a rally. And I'm now looking for, I've actually got a really nice clean area of support for gold. And I've said this on quite a few occasions. And basically it's down at this 2,600 level. Literally 2,600.5 sits right at this 61.8%. And also we've got a 50% of our fair value gap at 2,604 as well. And if I break that down onto a 1 hour time frame? Yeah, look at that. If I zoom in on this, there's a lot of confluence here. You know, you can never get it exactly right, but look at that 2,600. That sits at this previous high, the 50% of this fair value gap, the 61.8%, and a whole number support. So it's safe to say I'm expecting support at 2,600, right? That's really what I'm looking for, and that's really what I'm holding out for. So I've actually got an alert set at that level, and hopefully we can get some nice moves from gold. So I'm hoping that gold can set off a little bit more, get down to there, and then we're just going to target those all-time highs again. This environment for gold right now is bullish, right? There's no doubt about it. It is bullish. Now, Dillaby, you asked me a question yesterday, which my system seems to be breaking on me. But you asked me about my risk management strategy and what I do. Well, I'll give you my risk. So it seems what's happened this week and everything stopped working on us. I'm going to give you my risk management plan for free. So when I reach 1-to-1 risk reward, I close half of the position. And then I look for a more sensible stop loss. Now this is a little bit, this is a bit subjective, this bit, but it comes on a case by case basis, a trade by trade basis. But really, I try and look for, I try and at least move that stop loss to protect myself a little bit more, and I try and move that stop loss so it's in a more sensible place than what it was originally. Once we've already got the reaction, we've got our 1-to-1 move, we can probably find a better area for our stop loss, whether it's the next high down or the next low down or whatever like that. I can't really tell you how I do that without it, showing you an example when I'm in a trade. So next time one of my trades gets tagged in, I'll show you what that looks like if we can reach 1-to-1. And then what I do is when I reach a 2-to-1 risk reward, or 1-to-2, sorry, risk versus reward, I close a bit more. Again, a little bit subjective. It depends on how the trade's going. It depends if we're at a low, if we're at an order block or something like that. But I still close a little bit more of the trade. But what I do more than anything is I move my stop loss to where I entered, no matter what. So that would mean that should the market go against me, then I can actually put that stop loss. Should the market go against me, I'll be stopped out of where I entered, and I would have made some profit overall on the trade. Okay. And then after that, it's a nice frozen reference. Let it go. I let the thing go. It's either then a straight TP or SL. And that SL will be at entry, of course, because I've moved it when I got to 2-to-1. And that's when I just aim for the take profit that I'm going for, or the stop loss, which will be at my entry level. This seems to have served me quite well. It helps me take the emotion away from the trading, and it helps me sort of, that's really what it does. It keeps me disciplined and takes the emotion out of it, which is actually a really important thing. So that's how I manage my risk. Okay, hopefully that makes sense to you. Feel free to take a screen grab, but obviously you can watch the streams again, or you can copy and paste it, or whatever you want to do with it. That's what I do. I'm not saying it's the best thing in the world to do, but it's what I do. Okay, good stuff. Also as well, I wanted to show you this because a member of our community, Jack, sent me this morning, and it was a really, really fantastic Euro Australian dollar trend rider trade. Yes, I know it's not a US dollar major. You can see, but it worked quite well, really well actually. And Jack was telling me that with the trend rider, can we start to scale into to winning trades? Because obviously when you're catching on to a good trend, when you're catching on to a decent trend, it means that you're onto a winner, and you can start adding to that trade. That's what we want to do, right? So what Jack's saying is, when he had his original entry, which was here, which you can see made a decent amount of profit, he's basically saying, can we just keep adding to that trade as we keep touching after? I don't see no reason why not. I actually think it's quite a good idea. Now, I would keep risk at a minimum here. So let's say I place 2% risk on these trend rider trades on the initial entry. I'll then probably go like 0.25%, 0.25%, 0.25% until that trend starts to finish, and then I close out obviously all my trades as per the rules as normal. And that's definitely something that I'm going to look to build in as well. So I just wanted to shout out Jack there and say thank you to him for sending me that, and maybe that's something that you guys can implement as well. Okay, cool. Right. The other thing I wanted to show you was, guys, a lot to talk about today, isn't there? Trading tools. Economic calendar. Today we have the ADP employment change out in the US. We also have some Fed speak as well. So we're going to see any clues on that and any clues on further interest rate hikes, and I'll make sure I will let you know, all of you know on that. But that could be, it could be a fairly busy US session, especially with what's happening now in Israel and Iran, with Fed speak and ADP employment change, which is a little bit of a warm-up. Previous 99 estimated 120. Hopefully we can get some good moves there. And then obviously Thursday and Friday is when the moves really kick off. I just wanted to show you as well what I'm thinking on the NASDAQ at the moment. A bit of a sell-off yesterday. I actually am looking for a bit of a deeper retracement here. You can see that really what I'm looking for, if I go down to the 4-hour time frame, again, really similar sort of trade to what it was to the, I forgot what it was now, oil. No, not oil, gold. I'm looking for 19,125. The reason I'm looking for that is because that's 50% of this fair value gap, and also sits roughly around where that 61.8% is. Therefore, I'm really hoping we can get some traction there. So it's quite a bit of a deep retracement here on the Nasdaq, and I'm quite tempted actually to now we've had that change of character here, maybe look for a bit of a pullback. Look to try and sell that pullback down towards my area. Now, again, you got to be very careful trying to short the stock market. I've been burnt many times doing it, so it might just be worthwhile waiting. But if there's a good opportunity to try and short this down, then I think we could do that. I also think there's some support coming in at 19,500. So I still think there's room for another sort of 250 point drop potentially today in the Nasdaq, and you can see the dollar index is recovering. This is quite an impressive bounce from 100 or 100.2. We did sort of say that the dollar was vulnerable to a bit of a bounce. We're definitely not in bullish territory yet, not until we get a break above 102. So it is still a situation where, like, come on, let's try and fade the dollar as much as possible. Not yet. Let's wait for it to get up to 101.7, and then we could potentially start looking for those cable and euro dollar longs as well. Okay, good stuff. Right, I think that just about sums it up. Marco, have you seen this? Have I seen the CHN 50? Let me have a look. Oh wow, wow. Jeez, that is unbelievable. Good spot that. Now the reason this is happening, Marco, is I don't know if you saw that China announced a stimulus package for the economy. That, coupled with the fact that probably US and European stocks won't be as attractive as, because obviously China are sort of well out of this and Asia are well out of this. So maybe people are flocking to Asia stocks while this is happening, definitely. But this will be mainly because of the stimulus package that China introduced. I don't know if you saw that, but I'd recommend that you check that out, because that's the reason why. I mean, that's incredible. If you manage to catch onto that move, then you got a good trade for the year there. Wow. Amazing. Okay, good stuff, everybody. I will end the stream there. Then apologies about the camera. I really am sorry. I don't know why I done that, but hopefully you can you still manage to get the full benefit out of the stream. I will be active in the room throughout the rest of the day should you need me, and I'll post some market analysis in there as well. I'll be back for my final stream tomorrow before I go on holiday. So I'll be doing an NFP preview. Anything you want to know about non-farm payrolls, come and join me tomorrow at 10 o'clock in the morning, and I shall see you there. Until then, trade well, trade safe, and I'll see you